Here to discuss, joining me now are Lazard Managing Director Dennis Berman and CNBC's own Bob Pisani. It's great to have you both here. Bob, just set this up for us because it does seem, as you point out, that many of their companies are well-known names in corporate America. They're big companies. They're definitely going to need big institutional backing in order to affect any change here.
Yeah, this is a very unusual situation. It's sort of a perfect intersection of three hot investment themes: ETFs, ESGs, and activist investing. Essentially, this company, it's a very unusual ETF. They're not really an ETF in the traditional sense that they go out and take positions in companies that they have strong feelings about or mixed with their investment ideologies. They're a lobbying organization that's going to go out and try to influence other big shareholders like Vanguard and BlackRock and State Street to go along with their essentially climate change ESG agenda. There's nothing wrong with that, but they're going to get a lot of pushback from people who already believe that some of the index fund managers have a little too much power. Some of the active investors don't like the index guys, but now people are going to get concerned about too much influence in terms of shareholder votes by these big corporate index companies that are out there. And they're going to start saying, hey, wait a minute, now it's getting political. Now we're getting ESG and climate change involved with these fund managers, and I think you're going to see some pushback on that.
Dennis, we might see pushback from the broader public, but I don't expect these institutions to push back on engine number one's ESG initiatives. I mean, they go with the flow, don't you think? It seems obvious to me that a firm like BlackRock, for instance, is never going to say, no, we're not going to vote with you on this. I think there's no way. I mean, they're trying to outdo each other in achieving ESG goals.
Well, look, I can't opine on any individual product. I will give you some context of the activism world over the last 10 years. And Bob is as aware of this as anyone, I'm sure. But there's been a coexistence between small activist funds, small activist players, and the largest big asset managers who want to bring change, whether it's in the compensation realm, whether it's in the environmental realm or governance realm. And in many cases, there's what we call, the request for activism, where a large player, this is an active fund more than a passive fund, Bob, is calling up a small activist and saying, hey, can you do something here? So to me, putting everything into context, this is probably just part of that bigger coexistence between the small activists and the smaller, and the larger institutions.
And Bob, I think to the point you're making, that this is how a very small company achieves very large influence. It's because they do it under the umbrella of ESG, and so it's hard for the big institutions to say, we're not going to go with you. And if they do go with them, because like you said, some of these goals are political, you might get some public pushback, right? So if some of the public turns to these three major companies and says, well, wait a minute, your values don't reflect mine, doesn't my vote count? It could raise all over again the issue of whether the people voting on these issues are the shareholders themselves and not the index funds that manage the money for them.
Well, there has been proposals made that we should give all of the shareholding rights back to the actual individuals rather than to the funds themselves. That's a real mess. I'm not sure that's going to ever happen. I don't think, arguably, it should happen. But here's what's amazing. This was a very academic discussion. Wait a minute, index fund providers have too much proxy voting power. This was a purely academic discussion. Nobody cared about it until engine number one won the Exxon fight, and they won it, as you pointed out, by getting Vanguard and getting everybody else, State Street and BlackRock, to go along with them. Now, all of a sudden, we've realized you can actually leverage that because, as Dennis said, this is the moment for climate change, for investor activism. That's that perfect intersection I was talking about. And so the moment has come. The problem now is that the index providers are now in the crosshairs of a political fight about climate change. Remember, Republicans, for example, are pushing back against the SEC about climate change. They've already told Gary Gensler, we don't think that this is part of the SEC's mandate for you to go out and start polling corporate America on what they're doing on greenhouse gas emissions, which Gensler has brought up this morning in his speech. So there's a real political crosswinds here in what seems like an innocuous, corporate development.
Shepard Smith here. Thanks for watching CNBC on YouTube.